Donald Trump is going to bring a new economic strategy to US politics. People are calling it Trumponomics. But what does it stand for and how will markets take it? Peter Dixon joins us now. He's global equities economist at Commerzbank. Peter, welcome. What is Trumponomics?
Well, in a way, we're going to have to wait and see over the course of the next few years. But I mean, as far as we can tell right now, it seems to be a policy which envisages a much bigger role for governments. And so, if you like, it's an old-fashioned fiscal pump priming, which, of course, will have implications for monetary policy. But I think we'll have to see what the fiscal side looks like first, and then we'll see exactly what it means for monetary policy.
One of the most immediate effects has been a rise in yields and a steepening of the yield curve. What does this mean, and how should we interpret that?
Well, I think we'd interpret it initially as reflecting the fact that the markets are concerned about the huge potential splurge in activity which Mr. Trump has promised from the federal government side. And of course, if you actually look at the figures which have been bandied around, it suggests that over the course of the next couple of years you'll see a pickup in growth, but in the longer term you'll see a far bigger pickup in the deficit and debt, which of course is bad news for government bond markets, technically. So at the moment that's where we seem to be heading. I think markets are just looking forward to assess what the potential downsides of Trumponomics might be.
What about interest rates and the Fed? Monetary policy and fiscal policy usually stand very separated. Is there going to have to be more connectivity between the two?
Well, I think over the course of the last, 7 or 8 years, we've seen monetary policy do all of the heavy lifting for governments. And now, of course, potentially Trumponomics, both in the US and maybe as a signal for the rest of the world, suggests that fiscal policy may be coming back onto the agenda. Now, I guess what that implies is that interest rates can rise a little bit because they don't have to stay low to support the economy in the way that perhaps central bankers thought they once had to do. So, in a sense, that's good news. Certainly good news for savers, and it certainly would reflect Mr. Trump's comments during the election campaign that maybe what the US needs are higher interest rates to help those people who have been disadvantaged.
You say need to rise a little bit. We've already had a little bit. We're expecting another little bit in December. Do you see rates rising, having to rise faster, quicker?
Well, I think that depends on exactly what the new administration proposes. I mean, from where we're standing at the moment, you could argue that the neutral real interest rate in the US stands at around 2%. So, we've got quite some way to go. But I think central bankers have always said we're going to go there at a relatively modest pace. So, whilst we might get a rate hike in December, I don't think the Fed is going to be in any position to continue hiking rates in the course of 2017. I think they'll take it very slowly, very gradually, and we'll take some time to converge on what we think is the equilibrium rate.
Yeah, we've heard a lot about the worries about deficits. You talked there about potentially increasing the deficit. What effect does this sort of thing have long term?
Well, in the longer term, it basically implies that you're going to have to find a lot more borrowers, willing borrowers, to fund government spending. And of course, what's interesting in the United States over the course of recent years is that the Chinese have been one of the biggest buyers of Treasuries. And of course, Mr. Trump's comments over the course of recent months have suggested he's not very keen on a significant amount of Chinese involvement in the US. So there's going to be some tension there, I think. But generally, it does mean higher interest rates. It does mean, if you like, a return to the financial normality that we experienced prior to the crash of 2008.
You mentioned higher interest rates, you mentioned China. How about other emerging markets? How are they going to cope with higher interest rates?
Well, there are two things here, of course, with regard to emerging markets. One is the impact of higher interest rates, which of course will mean that it becomes more attractive to invest in the dollar, which will probably put downward pressure on some of the emerging market currencies. And of course the other one is the extent to which Mr. Trump will engage in some form of protectionist measures. And to the extent that Asian emerging markets in particular have been great beneficiaries of globalization, that could put further obstacles in their way.
Let's take a look at some other areas, such as banks, for example. Higher yields on the bond curve. What effect does that have? We've seen bank stock prices rise recently since the announcement for Trump. Why, and are we going to see more of that?
Well, I think it reflects the fact that low interest rates have been hurting banks for a very long time. We've got a low and very flat yield curve. if you have a steeper yield curve, it means better opportunities for maturity transformation, better opportunities to earn reasonable profits. So maybe it's good for banks. The extent to which it continues will, of course, depend on the shape of the yield curve going forward, which, of course, depends upon A, what happens to long-term yields, and B, as we've just discussed, what happens to the short end. But, I think over the course of the next year or two, maybe we'll see a little bit of help towards the beleaguered banking sector.
We've seen the price of copper go up, and that's linked, I guess, partly part of his infrastructure spending promises and so forth. How about the energy sector, though? Away from minerals themselves, but the energy sector particularly, the big oil companies, are they going to benefit?
Well, I mean, if we see a Trump government which decides it wants to invest more in fossil fuels or encourages more investment in fossil fuels, then potentially yes, because we'll hopefully see a bit more fracking in the United States. That's good for oil companies. Obviously, there's always a loser in this kind of game, and the losers will be green energy, green technology, and of course we'll see a lot of shouting from the green lobby if that comes to pass.
What about geographically? How about us here over in Europe? Let's take the UK first of all, because it looks like obviously we're ultimately going to stand alone from the rest of Europe. How should we interpret what's going on in the States over here?
Well, I think we have to look very carefully at what's going on, because I mean I don't think Donald Trump is necessarily going to do the UK any particular favours. I think there's a serious risk here that the UK doesn't get the kind of trade deals that it would like. Certainly Mr. Trump's rhetoric over the course of recent months has not suggested he's in any great hurry to sign trade deals, even with the likes of the UK. So I think there are clear risks there. And when it comes to the wider European picture, of course, I think the main concern that I'm hearing from European politicians is with regard to A, globalisation, and B, security.
Yeah, talk there about globalisation. We've got this rise of populism. That's presumably the opposite, isn't it? The isolationism. What damage could that do you think, globally, to growth and to other aspects of the economy?
Well, I think if you look at the global economy as a whole, then clearly it will act to crimp growth. It will act to crimp global living standards. But I think the question is, who's benefited from globalisation over the course of the last 10 or 20 years? And it probably hasn't been the US consumer, or indeed the consumer in many parts of Europe. So if we start to see the barriers going up, I don't think it'll help consumers on this side of the water a huge amount. I don't think it'll help the US consumer either, but certainly it will hammer the Asian economies, and I think as a consequence the net effect of higher trade barriers will lead to a significant loss of global welfare.
Okay, all right, Peter, thanks indeed. Very interesting. Peter Dixon there with his view of Trumponomics and what it means to us here on this side of the Atlantic and to other areas around the world. And of course, we await to see further appointments from Donald Trump as he continues to populate his government, which comes into effect in mid-January.